Hi, everyone, and welcome to a great episode of Project Peak Performance. I'm delighted to say that myself and Rob are joined with Robert Rolih, and he is an author of the international best-selling book, Million Dollar Decision, which I'm sure we're going to cover, and I can see it over his right shoulder on his bookshelf as well. I've had the pleasure of having a listen on the audio book for that particular one. Robert is an investment portfolio specialist. He's also a speaker, shared the stages with the likes of Gary Vee, Daniel Priestley, Brian Tracy, and many, many more as well. Everything is very much focused around key financial plans and trying to make the concept of financially investing simple, I think, is the first conversation we had, Robert. So that works for us. For me and Rob, investing simply would be a really good topic. But first of all, how are you, and how is the world of investing?
Yeah, I'm great. And in the world of investing, a lot of great things are happening. The markets are going up all the time. The governments are printing money, and you just need to be on the right side of things. So yeah, it's fun. It's fun.
That's great, and it's good to hear. And we're going to sort of unpack that a little bit deeper. How did you get into this space of financial planning, investing, the strategies that you use? How did it start? Where did it come from?
Well, I lost a lot of money because I trusted financial advisors and bankers and asset managers. That was the reason. So I was an entrepreneur. I started my own business from zero when I was a student. And after 5 years of hard work, my company started to produce quite a lot of profits. And at that time, I was totally financially illiterate. So I knew that I should invest a part of the money that I'm making, but I didn't know how. And that is why I trusted financial advisors and some asset managers. And year after year, I basically gave them almost all of my business profits. And after years and years and years of doing that, me and my wife had a conversation about money. And she said, Robert, I know that you trust these guys, but maybe just check, what is happening with all that money. So I ordered all the account statements. And when the envelopes arrived, it was like, what? Are there some zeros missing? Money that I worked hard to earn was basically almost gone. So I was totally devastated, and it was really a dark period of my life at that time. And that was the reason why later I decided to take take all the investments that I'm doing, take my financial life into my own hands. And I stopped trusting financial advisors, the financial industry, and I started to dive deeper what is going on behind the scenes of the financial industry. And I realized that the financial industry is not on our side. That their interests are not aligned with our interests. And I spent basically 7 years of my life reading books. I read more than 300 books. I attended all the best seminars all around the world on this topic. And I talked with a lot of financial industry insiders. And after all these 7 years, I finally realized how to invest the right way, and how to invest in a way where you keep the returns and not the financial industry. So that was the revelation for me. And after a couple of years of doing that and investing on my own, I realized that most people, most entrepreneurs, most hardworking people all around the world have the same problems as I had in my career. They trust their financial advisors, their bankers, and they lose a lot of money, not knowingly, They don't even realize that they are losing all that money, but they are losing it, And that is why I decided to write a book and to create online courses and stuff, like this, to help investors get out of this rigged game of investing.
It's such a valuable point, because I think, especially for our audience, and especially the way the world is at the moment, people want to plan for the future. They want their money to work for them. But sometimes you forget that an accountant has a business, a financial advisor has a business, and also the financial places that you may put money, they are businesses as well. So they're looking to make profits from you as an individual in reality, not necessarily nurture your own profits. They have their own interests. And
And
when you said that, it makes sense to me, actually.
yeah. And unfortunately, in the financial world, when it comes to financial advisors or asset managers, the rewards that they are getting from managing your portfolio are basically outsized. They are later, maybe we can talk about the effect of small commissions and fees on your portfolio in the long run. And this is something that people don't realize, that small commissions and fees that they are charging, like management fees, over a long period of time, these commissions and fees grow. They compound. And in 10 or 20-year time, you lose a ton of money, hundreds of thousands of pounds or even millions of pounds through commissions and fees that compound over time. And if you are interested, if your audience is interested, I can dive a bit deeper into this a bit later because this is a super important topic.
Yeah, it compounds and it eats a lot of the profit, which is very interesting. So I guess what I would like to ask you, if it's okay, is if we use me and Rob as an example, not too dissimilar in age. We've both got 2 young children. We're both
I also have 2 guys.
Family guys. Rob's got a great successful career. I've got a business, so slightly different in that way. But arguably, we'd probably both like to retire in around 20 years' time, something like that. So we've got 2 thoughts. We've got retirement in 20 years as a thought, and we've got our children in 20 years as adults as a thought as well. Would we need to have excess monthly income to invest, or would we need to have a big chunk of money to invest, or somewhere in the middle? What would be the starting point for us, would you say, Robert?
So it doesn't matter. The best way to invest is to regularly invest. So to do, it's called dollar cost averaging. In simpler words, invest every month, or invest bi-monthly, or invest 2 times per year, or once per year if you cannot afford to invest more often. So yeah, you just need to develop this habit of constantly investing. But then, of course, you shouldn't invest in just any type of financial product. Usually, the most popular financial products are the worst ones for investors. So, what we do, what I do for me personally, and what I also teach my students, is to invest in the lowest cost investing vehicles, like index funds or ETFs or tracker funds. But again, even when it comes to index funds, you have a vast variety of different ETFs that you can choose from. And you need to choose the ones that have really low fees and invest in stocks, in baskets of stocks that have potential for long-term gains. So, for example, if you invest in a region of the world that doesn't have a nice prospects, long-term prospects, you will not get outsized returns. So you need to be careful about quite a lot of things, quite a lot of details. Yeah.
That's probably quite hard for people to do. That's probably why they use a financial advisor or someone, is because they're unsure of where to put that in.
If you want a very simple solution, you just invest in a simple global ETF. Okay. This is what my wife is doing. She's just investing regularly into a global ETF, and that is how you are exposed to the global stock market. And if the global economy grows, your portfolio will grow. And because of all the money printing that is happening all around the world, and it will not stop, this is another driver for the stock prices in the future. Many people are afraid of the next recession and are pessimistic about the future. But I don't see a reason why you shouldn't invest, because with all this money printing that is happening, our currency is being devalued. And our purchasing power is being eroded. So you need to invest. So in the old times, you took a risk by investing your money. But now you are taking a risk by not investing your money. Yeah. So if you have your money under the mattress, this is a big risk. because you can be pretty sure that in 10-year time, the purchasing power of that money will be halved. You know? So you need to invest.
And this is because of inflation and things like that. I mean, we had in the UK last year, inflation was averaging around 10%. So if you had £100,000, it would be almost worth 90 at the end of the year if you didn't invest it, I guess.
Yeah, and there are also something that people don't realize is, especially wealthy people or entrepreneurs who have a lot of spare cash, is that there are two types of inflation. The first is consumer price inflation, these everyday items, food, shelter, and so on. This is CPI, consumer price inflation. But this inflation is only important for people who don't have a lot of money, who can hardly get by. But for people who have higher income, for example, entrepreneurs, freelancers, managers, and so on, this inflation is not important. The important inflation for you is monetary inflation. And this inflation means how much money do they print every single year. And on average, over the long time period, the average is 6 to 8% annually. So 6 to 8% annually, the money supply in the world grows by 6 to 8% annually. And CPI sometimes goes to 10%, sometimes, and now it's much lower. Now it's at 2 to 3%, but monetary inflation is constant, and they are constantly printing money. So if you have some money to invest, if you have more money than you need in your life, then the only important inflation for you is monetary inflation, because you basically compete. You compete with others when investing in different asset categories. So all these asset categories, for example, real estate is growing really, really fast because of this monetary inflation. And everybody wants to get rid of cash because cash is trash, cash is being devalued, and you need to invest it somewhere. So that is why the price of real estate is going up so quickly. That is why the stock market is going up. That is why the crypto market is going up, and so on.
Did you say cash is trash?
Yes, something like this. This is already Dalian's wording, but yeah, this is true in our world today. They are printing our money. They are constantly printing our currencies in unlimited quantities, and purchasing power is being eroded.
Very interesting.
So I've got a quick question for you, Robert.
Yeah.
So originally, when you said you saw a financial advisor in those early years and you were investing the money into it, we might have some listeners out there who go, "Oh, I've got a financial advisor," and they seem to be doing well, but I don't really know what they physically do. So when you said that you looked at the statements and you looked at the money that had been missing or lost in what they were doing, like what was you originally guided by those people? Like, did they say, right, you need to invest in this particular fund, just so that if anyone's listening going, I've got a financial advisor, that's something similar that they've said to me, I can now explore something with you and what you do and some of the courses and some of the books, just to go, I want to be a bit more educated. When I do speak to them, I can challenge on what they're doing.
Yeah. So the first thing you need to check is the management fee that they are charging. Okay, what kind of management fee are they charging for their work? Usually, this is around 1% of your assets under management. So, for example, if your portfolio is, let's say, 1 million or 100,000 pounds, they are charging you 1% of that every single year. Okay, so let me give you a very practical example. If you have a portfolio valued at 1 million pounds, and if they charge 1%, this is 10,000 pounds per year. Okay, but just in the first year, because from then on, this money, this fee that is being taken from you is not invested. Okay, and over the course of the next, let's say, 30 years, this amounts to approximately 80,000 pounds. So, 10,000 fee over the course of the next 30 years, if you just take 7 or 8% annual growth of your portfolio, this fee at the end accounts for 80,000 pounds. So this is the true cost of the 10,000 fee over the course of 30 years. But when you account for all the next years of fees, altogether, you will be basically paying your financial advisor more than 1.2 million pounds over that time. If you just take all the fees and compound them over the 30-year period. So the first thing, and this, if you just think about it, this is like 2 to 5 years of hard work. If you make 500,000 pounds per year, for example, in your income, this means that your hour is worth 250 pounds. So, and if you divide 1.2 million divided by 250, this is basically 2 years of hard work, every day. So you are paying two years of 2 years of hard work just to pay off the fees for your financial advisor. And this is something that nobody is talking about in the financial industry because it's not in their interest. Fees compound, and over the long time period, it's really terrible for people, for investors. So the first thing I would ask is, what is the management fee that I'm paying you? And the second thing that you should ask is, into what products are you investing my money? So, for example, if he or she is investing your money in mutual funds or in any fund that has management fee, that is, so these management fees are separate. Okay, so the first management fee is his management fee. Then the second management fee is the product management fee. So, for example, if he is investing in a fund that charges 1% or 2% management fee, this is on top of his fees. And both fees combined, if you paid 1.2 million over the course of 30 years, now it's like 3 or 4 million. That's, crazy.
Scary.
Yeah. So this is something that you should ask, first his management fee and that he's charging personally. And then the second management fee, the product management fee. What kind of products does he have in your portfolio? Let me give you one example that will really, hit the nail here. Recently, my youngest son's teacher invited me to his class to give a presentation about my book, The $1 Billion Decision. And it was a wild bunch of 10-year-olds. But after the presentation, I gave them my book, and also the teacher took one, a copy. And 3 months after that, the teacher writes me an email, and he says, I read your book, and I realized that I also have a financial advisor. Somewhere in Asia. I'm from Slovenia, but my son's teacher is from the UK. He's an expat living here in Slovenia. And he has a financial advisor in Asia that is managing his investments. And he said, I realized that when I started to dive deep into the reports, I realized that most of my returns are being taken away through the fees, the commissions and fees that he's charging. And then he sent me the reports. And when I took a look, I found out that in the last 2 years alone, the market went up 40%. So if you just invested in a simple index fund, tracking global equities, global stocks, you would have 40% gain in the last 2 years. His net return was zero in the last 2 years because of the poor choice of investment products and because of all these fees. So basically, so let me, just imagine if you have a 100,000 pound portfolio. And if your net return in the last 2 years is zero, basically you lost 40,000 pounds.
Yeah.
Just because you trusted this guy, And this is something that is the reason why I wrote the book. That is the reason why I'm doing all these things, because people are losing a ton of money without even knowing it.
Yes,
and you might think that your portfolio is doing well, but you need to just simply compare it to the growth of the global stock market. because this is the simplest way. You just invest in the global index fund. And that's it, no worries, the lowest possible commissions and fees. And the commissions and fees that you will be paying are like 0.1 to 0.2% per year. Okay, and that's it. So 10 or 20 times lower commissions and fees compared to something that financial advisors or asset managers are doing.
Yeah, and it's much. We both work in the property industry in the UK, Robert, and one thing that always blows my mind, but it's great that it's there, is when you go to get a mortgage and you get the mortgage illustration, the mortgage offer in paper, and say that you get a 25-year term, for example, it gives you the statistic at the bottom. They have to do it through financial regulations. The statistic of, let's say you're getting a 400 grand mortgage. Well, at the end of 25 years, based on interest, you will pay back 1.4 million, for example, but you physically can see it there. So you're motivated to pay your term off quicker, to pay less interest. But in this space, in the financial world, where you don't see that, but you've just explained it, which is...
And it's also quite unassuming when you think, oh, it's only 1%.
Yeah.
Yeah, that's it. You think, oh, it's only 1%. It's no problem. I keep 99%. Yeah. He keeps 1%, or she keeps 1%. But it's not the truth. The truth is that small fees over the long period of time, they can halve, or even even worse, your portfolio returns or your overall portfolio.
I want to ask you about crypto, but first of all, I just want to make sure that everyone's understanding the global index fund, EFTs, investing in the index. So could you just give a simple summary of what that is, basically?
Great question. So, for example, if you want to invest in the stock market, we all know that over the long run, the stock market produces the best after inflation returns. Okay, you compared to gold, compared to bonds, it's outperforming everything else like crazy. Mm-hmm. So we all want to be exposed to the stock market. And the easiest way to be exposed to the stock market is to simply invest in a big basket of stocks. Okay, not just 3 stocks, not stock picking, like 5 stocks, but 100 or 500 or 1,000 stocks. And the traditional way how to do that would be to buy a mutual fund. Okay, but mutual funds have very high commissions and fees, like 1 to 2% annual management fees. And that is why more and more people started to realize that this is not a good option, because I already told you how much money is being taken away from you by these small fees. And the better product that you can choose are index funds or tracker funds or ETFs, so exchange traded funds. This is basically almost the same product as the mutual fund, but so it also invests in a big basket of stocks, but with much lower commissions and fees. And because of the lower commissions and fees, you get to keep much more money over the long run. Okay, and this is the key. So by investing in index funds or ETFs, you are investing in the best companies in the world with the lowest possible commissions and fees.
So for example, me, Robert, I wanted to understand the stock market. So about 2 years ago, I opened up a Hargreaves Lansdown account, and I just thought naively, I'm just going to try and learn it. And I've got £100 a month that I could throw away. Didn't want to throw it away, but I could play with. So every month, £100 gets deposited into Hargreaves Lansdown, and I've got my watch list, and I wanted to learn who does what. So I've invested in Meta, I've invested in some banks, I've invested in Deliveroo, I've invested in things that to me make logical sense. And I've managed to grow that by about 40% over that 24 months, which is similar to what you said. But what I didn't realize is because I was doing small transactions every month, I think it was about £11.50 per transaction that it cost me to trade it. So I was losing 11% every trade, but then I was making it back. But that was me kind of trying to learn it. So the exchange trade fund versus me going directly to Meta as an investment, as an example, what is Meta in the exchange trade fund, and is it just less money that I'm paying to invest here effectively?
So if you want to invest in individual stocks, you need to be a very good stock picker.
Hmm.
You need to know, you need to do a lot of research about the stocks that you are investing in. And most people don't have time, don't have the knowledge to do that. Okay, you can try, it's not a problem. But the simplest way is to simply invest in a diversified basket of stocks.
Yeah.
That includes Apple and Meta and Google and Tesla and so on. So this is, let's say, a lazy way to win the investing game. And you don't need, because most busy professionals, most business owners, they don't have time to do the research, what is Meta currently doing? Is it okay to invest in it? Or is it better to invest in Tesla or whatever, So by simply diversifying into an ETF, you can streamline your investments. You can simplify them. You can also save a lot of time, and that's the key.
Thanks.
You don't want to be an active investor constantly buying and selling individual stocks. This may sound fun, but it's not. In the end, you will very likely underperform ETFs.
Do you know what? I was just really interested. I'm glad you clarified that, because I've been doing the last few years similar to what you advised then, but then I have people around me who are they're investing in cryptocurrency or investing in particular stocks, and like they're tracking on a daily basis. And I'm thinking, am I missing out on these opportunities? But then the weighing up, I only had a conversation last week with one of the guys in our office, and I was like, I could not each day be stressed about buy, sell,
it's a lot of stress,
and that's the bit.
a lot of work, And just imagine, you are a business owner. You are focused on your business. You cannot be focused on selecting the right stocks at the right time and then selling them at the right time and so on. It makes no sense, Instead of that, focus on your business, make more money, and just simply invest in index funds, in ETFs, and you will your wealth, your portfolio will be much bigger or larger in the long term compared to just wasting your time picking stocks and so on.
I would think the next question people have got is, how do you actually invest in an ETF? It may be something that you kind of describe with your students, but what's the easiest way?
Simple and easy. You just open a brokerage account, and that's it. Any brokerage account that you can think of is okay. If you can buy stocks through your broker, you can also buy ETFs.
Okay, brilliant.
You can also invest in index funds or ETFs through your pension plan. So in your pension plan, check what is in your pension plan, because if there are high fee products, you can simply switch to ETFs.
Interesting.
Yeah. So if you are using SIP or whatever else, self-invested pension plan or whatever, you can simply switch.
You mentioned about money printing, and I found that really interesting, actually, how that dictates the world economy, the inflation of the CPI, but actually the money inflation element of things. And it just makes total sense to why you get people barking on YouTube and TikTok that the world's about to crash, but actually it keeps printing money and it doesn't, and it never does. How much of an impact did furlough have across the planet from a financial sense? Because the amount of money that was just thrown into the economy across the globe with furlough, with lockdown, is mind-blowing, actually. So did you see a big impact?
Yeah, that was a huge impact. That was in the very short period of time, they doubled the amount of money in circulation. And that was the reason why we had this inflation surge in the years post-COVID years.
Wow. What's quite interesting is, like, when you look at money as an entity, it's like a free-flowing thing around the world. So somewhere it's in someone's pocket. So someone has to then utilize that money in some capacity of some sort. So, if it went to furlough, it went to businesses, the businesses earn the money, the people in the businesses earn that money, that goes into their salaries, and then people have money to then invest, which actually then you see in why people are investing into real estate, housing market, into investment funds, because they need to then put that money back into some matrix to plug it back into making some more money.
You simply cannot hold cash for a long period of time, and that is why everybody is very motivated to invest. And as long as they are printing money, the markets will not go down. Okay, there might be a recession, there might be a stock crash. Maybe stocks go down 20%, 30%, but it will not be for a long period of time. The markets will go up again. So as long as they keep printing, and they must keep printing because of all the government debts and so on, it's not possible for the governments to stop printing.
Very interesting. We've mentioned the word a couple of times, but what is your take on cryptocurrency? I'd love to hear your view on that.
Yeah, I'm a very big fan of crypto. I have been investing in the crypto market since 2017. I have quite a big part of my cash reserves from my corporate cash reserves are in Bitcoin, because I believe that in the long run there is basically no way that Bitcoin, almost no way that Bitcoin doesn't produce very nice returns. I also invest in a lot of smaller cryptos as a part of my aggressive portfolio. So yeah, I'm a big fan of crypto. I believe that Bitcoin has a bright future, and it will eat market share from gold over time. So right now, the gold market cap is around 18 trillion. And if we compare this to Bitcoin, that is digital gold, gold for new generations. So basically, what is Bitcoin? Bitcoin is gold in a digital form. So they took gold and they solved all the problems with gold. For example, gold has inflation because they mine gold every single year. They mine 1 to 2% new supply of gold. It's very difficult to move gold from one country to another. It's difficult to store and so on. So Bitcoin is digital gold for new generations without all these issues that gold has. And that is why I believe that Bitcoin is the asset of the future. And even though it's very volatile, I always tell people, that this is like a teenager. Gold is like an old guy, that cannot move fast, because it has been around. Gold has been around for thousands of years, but Bitcoin has only been around for like 15 years now. And Bitcoin is like a teenager. It's much more volatile, but this volatility can produce amazing returns. So, for example, if you can force yourself to buy Bitcoin regularly, or maybe to buy more when it goes down sharply. For example, I was buying, me and my members were buying Bitcoin when it was 16,200 1 year ago. Less than 2 years ago. At that time, nobody wanted to buy Bitcoin. And Jim Cramer, this famous TV host on CNBC, was telling investors, get out of crypto, Bitcoin will go to zero. Get out of crypto while you can, he said. And at that time, I issued my buy signal for Bitcoin. So right now we are sitting on like 350% gains. And when Bitcoin reaches 100,000 and most people will start to buy, we will be already sitting at 500% gains, with this investment. So if you can force yourself to buy more, or at least buy Bitcoin regularly, I think that it's a very, very high probability, not a certainty, but very high probability that you will do amazingly well in the long run.
Yeah. So I actually, I was just looking back through when I bought it. Yeah, I bought it in like July 2022 as a surge. Right. And and someone said to me, just if you've got that spare bit, just go and do it. And I've just sat on it. I haven't done anything else with it. And it's just like, it's now spiked better. But one of the questions actually on that is, again, going back to the conversations I have with people, someone was talking to me about investing into MicroStrategy, because they were saying that MicroStrategy is buying copious amounts of Bitcoin as a collective.
It's a leveraged bet on Bitcoin.
Yeah. So is that where would that be an aggressive trade compared to say just buying Bitcoin in general and seeing Bitcoin go up? Like, what's your views on that? Because as soon as Ian said, "Oh, we got this person," and someone was talking about this last week, I was like, I'm clueless what you're talking about. So I'm gonna ask Robert when I see him next week about MicroStrategy, and then I can go back to him and say, no, don't do that.
I'm not buying MicroStrategy stock. I need to confess that I am not in favor of buying these kind of stocks. I prefer to invest directly in Bitcoin.
Yeah.
So that I can basically own the real Bitcoin, not just some kind of derivative of Bitcoin. So MicroStrategy can be a very good speculative bet on Bitcoin, but I wouldn't buy it now when it's already up like, I don't know, 700% in the last year or so. But if there is a big drop in Bitcoin price, maybe in the next years, if there is a bear market in crypto, then if you are a speculative investor, if you are a bit more aggressive, you can, of course, buy a bit of MicroStrategy stock. But I would not be overexposed to this because this is a bit of speculation, Because
so this is where you're talking about,
when it comes to owning stocks like that, because I don't know, maybe something can happen to Michael Saylor, to the owner. Maybe they decide to change strategy. Maybe somebody steals their Bitcoin. Maybe I don't know. Something can happen. But for Bitcoin, if you invest directly in Bitcoin, the probability that something can go wrong is basically astronomical. It's almost zero.
So that's the point where you're saying the difference between maybe just more traditional stocks and shares. Like you could buy directly with, you go for more compounded views on it. So I don't know, I put £100 or £1,000 into Bitcoin and just allow it to compound and do its thing. Or if I've got £100 to spare, that I could just chuck it in MicroStrategy, knowing if I lose it, but it could go up, it could go down, but it's not an investment for long term. It's more of a
play money.
Hope for the best.
Yeah, this is like play money. More, like a bit of a gambling, not entirely gambling, but a bit of a gambling.
Thank you.
Yeah, it makes a lot of sense. And you mentioned Bitcoin rather than crypto. Obviously, there's different types of coins, but
so I just focused on Bitcoin so far, but we can talk about also the other cryptos right now.
Yeah, because I think Bitcoin and Ethereum is the sort of the top two, if you like, that people kind of look at. But you're very much of the view that Bitcoin is the one to kind of more focus on, and then have a risk strategy as well for the lower ones.
What I wanted to say is that Bitcoin has a very special place in the crypto space. Bitcoin is digital gold. It doesn't produce anything. It's just a store of value asset. Okay, so Bitcoin is a store of value, and it's totally different. So Ethereum, Solana, and other crypto projects are a totally different animal. Okay, so you cannot compare Ethereum to Bitcoin. Ethereum is a software platform. It's a software platform where thousands of developers are developing apps on top of Ethereum blockchain, on top of this technology. And I could give you an analogy like Windows, Windows operating system. You have a Windows operating system on your laptop, and then there are thousands of developers who are developing different apps on Windows that run on Windows, like PowerPoint and Word and Photoshop and stuff like this. So Ethereum is a software platform. And that is why, these software platforms like Ethereum, Solana, and then you have Sui, and then you have Polkadot and others. These platforms are more similar to technology stocks because they produce value. Okay, Bitcoin is just a store of value. It doesn't produce anything, but Ethereum has value. It produces new value because this ecosystem, there are a lot of apps in this ecosystem that are producing revenue, that are producing profits, that are improving this world. You have financial apps, you have gaming apps, you have business apps on top of Ethereum, and so on. And this is real value that is being created there. So I compare crypto, I call them business crypto projects, Ethereum, Solana, and so on. These are business crypto projects because they are creating value. And they are similar to technology stocks. Sometimes I call them technology stocks 2.0.
Yeah, makes sense.
So I went to we hold technology events because I work in the tech space in the UK market, and we had Land Registry do a presentation a few years ago around tokenizing property assets. So would that be where, they were talking about, you then effectively list your house on what would be a blockchain, and you say, if you buy X amount, it's £5,000, but I still own the property, and if it goes up, you get this money back, and people can do it on their apps. Is that where Ethereum would be then? That would be something that would be built on that rather than something like Bitcoin.
This app that somebody is developing probably works on top of Ethereum or on top of Solana. So the underlying technology is probably Ethereum, but you don't even know it, and you don't care. You don't care. You just care that it works.
Okay, that makes sense now.
Yeah.
And Robert,
because, if there are thousands and thousands or millions of apps on top of these blockchains, then also the network effect kicks in, and the value of the network goes up.
Makes sense. It makes a lot of sense. I'm on your email list, and there's some great stuff that you kind of put out there, and I've been really grateful for some of the emails that have arrived in my inbox. You've got a webinar that you're running, I think it might be this week or next week, and that is about property a little bit. It's about property, but in a slightly different way. If people wanted to join one of your webinars, what is the best place for people to get in contact with you if they wanted to become a student? What's the best ways to do that?
So I'm constantly running my flagship webinar. This is where I explain what are my top 3 investments currently. I also explain what is the most important chart in the investing world and how you can double or triple your long-term returns just by understanding this chart. And I also go through what is happening currently in the stock market, in the crypto markets, and where do I see these markets going in the next couple of years. So this is for long-term investors who don't have a lot of time for investing, who want to be focused on their business, on their family, on their hobbies. And I'm constantly running this webinar. So if you just go to my website, robertrolih.com, and immediately when you will see the website, it's right there at the top under the photo of my book. It's the invitation to join this webinar. And I'm constantly running these events. This is a totally free event. Yeah.
We'll put that in the. If you said that's a continuously running event, we'll put that link in the show notes. So if anyone's listening to this, maybe beyond the next one, they can still be.
It will always be there because I'm constantly running my free webinars. So you can just go to my website and you will see what are the current dates and so on.
And that's your top 3 investments as well that you share.
The title of the webinar is my top 3 investments for massive long-term gains. And in the webinar, I dive deeper into what are these 3 investments. I dive deeper into the whole story about the commissions and fees. I dive deeper into the investing landscape, what is happening in the investing world currently. So it's a very good webinar where I explain all these things in detail and in simple terms.
Yeah, that's brilliant. And for you've got a big portfolio of students that are learning a lot from you. What does that look like, that student program?
So I currently have more than 7,000 members of my flagship investing program. And they come from 73 countries. So it's really an amazing thing that we are doing together. I work with my members in a way where first they are getting my online investing course, plus they are getting my email updates and buy and sell signals. So even though we are long-term investors, sometimes, like I said earlier, for Bitcoin, when it was 16,200, I issued a buy signal. When I felt that everybody is very bearish, everybody thinks it's going to zero. Now it's a good time to buy, and I'm issuing like 5 to 10 such signals per year. And my members are copying my actions, so they can copy my actions. Whenever I'm buying something, they can join me. I am notifying them via email, and then they can say, okay, I will also buy the same thing that Robert is buying.
Which is nice, because it's like you're saying, like, I'm doing this, like, you can come on the ride with me. And if it works out, it works out. If it fails, like this, I'm not trying to sell you it.
For example, in the summer, like in August, in the beginning of August, we had this big yen carry trade panic in the markets. All the markets went down by, I don't know, 10 to 25% in the beginning of August. And when the markets were at the bottom, on the same day, I issued my buy signal, and it was amazing because markets skyrocketed after that. So I'm trying to use this reverse psychology of investing, when investing my money. So when everybody is bearish, when something terrible happens in the market, I'm buying.
That's when they say the best investors, they get at the bottom of the curve before it hits the top.
It's very difficult to do that. Yeah, it's very difficult to do that, and like 99% of investors are not able to do that, because it's very demanding psychologically to buy when the markets are dropping sharp.
Robert, what is a Bitcoin worth today, roughly?
So today, I think it's like 65,000 or something. 65,000, and we were buying at 16,200. So let me check, but I think it's around 66,000. Yeah.
And what year were you buying them at 16,200?
Oh, that was 2 years ago.
Wow.
Yeah, that was 2 years ago. Yeah.
You wouldn't have minded having a few of those then, would you? Yeah, that's worked out very well.
That was a very good call, and I can clearly remember why I gave that buy signal. Because one day before I gave my buy signal, there was this show on CNBC, Mad Money, with Jim Cramer, a very famous show, and he basically urged investors, like, get out of crypto while you can, and then there was a big headline, get out of crypto. Everybody was talking about that. And I said, okay, now it's a good time to buy.
I wonder if Jim bought a lot of crypto at the time as well. I wonder if it was a plan.
He's a very good contrarian indicator, he is like, a ship, and you can just go against him and you will do very well.
Love that. Robert, it's been fascinating. It's been very, very helpful, I'm sure, for me and Rob and for our listeners. And we'll have it in our exclusive Facebook group. We'll tag you in the show notes. It will be out this Friday. So we'll share. We get most of our listens on audio, but it's also on YouTube as well. So I'll share the links with you. And I'm sure we'll speak again more because, it's something that's been really interesting. And maybe it's something, if you don't mind jumping back on the podcast in 6-9 months, something like that, to get a bit more of an update and a follow-up, that would be really helpful as well.
Or Ian, we could like some of your workshops you do one for our own group that they could just jump on one of the sessions. We'll do it together, and then obviously we can then de-load the group afterwards.
Yeah, we can also set up my webinar, like a live session for your audience. I can do a whole live session just for you. I will give a lot of great content, and then I will also invite them to join the Millionaire Money Making Machine program.
I think that would be something that would be very helpful for the group. Actually, so
we can do something like this.
Yeah, amazing. Well, thank you very much for your time, and thank you for everyone that's listened and watched. I think there's been a lot of eye-opening information there, and if people have got questions, check out Robert Rolih's website. I will put obviously the information in there, and we're back next Friday with another episode. So thank you for everyone that's listened and watched, and Robert and Rob, thank you as well for joining me, and we'll see you all next week.